TJ Podcast.
Welcome back to Trading Justice Podcast, episode 362. And it's an honor to have a friend of the pod, Pete Thomas from Zaner Precious Metals. Pete, you've been on the pod a few times, and you've given us some absolutely amazing recommendations, calls. You know, I remember last time we were on the podcast, it was about a year ago now, and you were recommending cobalt, and you were recommending rhodium, and you were recommending palladium, and all three of those had just absolutely skyrocketed. Pete, how you doing today?
I'm doing good. Welcome back to everyone to the financial district in downtown Chicago. Right now, you're on the physical desk of Zaner Financial, which is Zaner Precious Metals. We represent miners, refiners, recyclers, and also bullion dealers.
Awesome.
And it's good to have you back. I don't get a chance to talk to you enough, and it's nice to be here.
We definitely need to talk more. We need to have you on the podcast more because your calls have just been absolutely excellent over the course of the last few years. We've had you on the podcast, Pete. I want to kind of start with, kind of the coronavirus. I mean, that's kind of in the social conscious, and it's obviously, Wall Street so far in the financial world, especially in the United States, it's kind of written it off a little bit. I mean, we were just at all-time highs just 3 days ago.
Right.
Market just didn't believe that this pandemic or epidemic was going to spread as much as we have. And now we're starting to see the data from an economic perspective come in a little concerning. What's your take on the coronavirus specifically, the spread of it? Do you believe the data that we're seeing coming out of China? And I know you have a background where you've been on some of the World Health Organization's conference calls and whatnot.
Right.
On the coronavirus, Pete.
Well, let's put it this way. First off, let's do some numbers. The number released this morning was 77,000 people affected by the contagion. Roughly, the exact number from WHO 35 minutes ago was 2,618 dead. That's out of China. Now, this was interesting. The DNA structure of this particular disease, and remember, I'm in the gold business, so boy, do we get rumors, right? And this was a man-made virus, and the CIA made it, and yada yada yada. And
The tinfoil hatters and the conspiracy theories.
Exactly,
right. They were all over this one, right?
Oh, they're deep on this one.
Trying to wipe out the population.
Yeah. Let's kill the old people. But here's the thing. A very, very competent virologist, someone who actually knows what they're talking about, said that this disease was definitely not man-made. It's naturally occurring disease. And these are the numbers he gave us that I thought was very significant. 2 weeks is the general lifespan of this disease, number one. We weren't real sure. They were saying 10 days when you were affected, 14, 21. Right now, the WHO is saying roughly 2 weeks. Let's talk about
that's the incubation period, right? That 14 days, that 2 weeks?
Well, now that could go from exposure, incubation to end of life cycle. So generally speaking, if you're exposed to it today, a couple of weeks, you could pretty much you'll feel a little tired, you'll be achy, but it'll be pretty much at an end. So kill ratio is 2 to 4%, which is actually below the average flu. So this isn't as deadly as a lot of people, but here's the important thing that all of your viewers should know. Viruses do one thing in order to survive. They mutate.
Yeah.
A mutated disease is twice as deadly as a standard disease. Or when a disease, 75% of everything in nature exists as a right-handed object. When it becomes an isomer, it goes left-handed. That's when all kinds of bad things happen. They said this disease has continued on its path and has not mutated. So a lot of good news from people that know today. So looking at that and saying, okay, COVID-19 is in effect, looks like it's slowing down in China. The massive attack that they have made on this really are admirable. Friday afternoon.
What are they doing to combat the spread of the disease?
They're burning all their money. Honest to God, all the money. They're bringing all the cash in and they're burning it. I mean, if I was a stock guy, I'd try to find out who manufactured ink there, because they're Think about how much money they're going to have to enter.
Oh, they're gonna print more than they burn.
Oh, absolutely. There you go. Exactly right. Not inflationary though.
But, oh no, it's not going to have an impact on inflation. Don't worry about this.
No,
we live in an inflationary environment where inflation is not a concern in any capacity, except we see gold skyrocketing right now.
Right, exactly right. I mean, bottom line is, if they're going to come and confiscate your money, what do you want to own? Gold. I mean, that's pretty much it. So that's what's been going on, and not in small numbers either. We're like you were saying, we're seeing just massive flooding into it, and obviously that's been one of the things. I use something which is a funny little indicator I've been using, which has been amazingly accurate. The number one shoe, the gym shoe that's worn by the people in China, is Adidas. I have something I call the Adidas meter, right? I see how many Adidas shoes are selling over the days. Number 2 is Puma, right? And if there's a lot of Adidas being sold, that means the economy's good. Things are going well. People are replacing the shoes they're wearing. It's a funny little way to look at it. Sales of Adidas are down 85 to 90% today.
That is amazing. That is an astounding number, and that we're still only 2 months into this entire situation with the spread really only being kind of mid-January on. We're seeing reduction in sales out of almost every industry coming out of China. That is an astounding number of Adidas.
Right.
I mean, 85%. I mean,
your shoes wear out, you're not replacing them, baby. I mean, that just shows you it's a great earth level reflection on the economy, and it doesn't look like it's going to be getting any better. Now, this morning, the Chinese party said that they were going to open 6 provinces. They felt that I don't know if you've seen the giant trucks they're using to spray bleach into the air.
Oh, it's amazing scenes coming out of China.
Yeah, right. It really is. And so I believe that we're starting to see, I mean, an increase of 1,000 cases in a day, to me, shows that we're losing the velocity. As a trader, we look. So
we're still expanding, right? But we're slowing the momentum down.
Exactly right. That's a very good way to put it. So, realistically, we're going to open provinces. The question is, now here's the real bump in the road. Now that we're talking about the disease, let's talk about some of the side effects of it. The iron people, the people that produce rebar, are good friends in Australia who have suffered horribly with these fires and losing all their animals being killed.
Tremendous.
And oh, by the way, a vast majority of their business is done in China. So not only did their country burn to the ground, they got no infrastructure to support, right? I mean, they have suffered horribly. They're talking about they got nowhere to stack their rebar now because it's not moving. So when they close the port, using that as an example, you've got concrete, myfield, copper wire, copper solvents, silver, gold for plating, not so much in big volume. Cement is a huge item, which is, where do you put it? What's happening is they're declaring force majeure, which means that they're in a panic situation where they can no longer pay for these products because, oh, by the way, they closed all the branch offices for banking. There's nowhere to go. You want to go in and write a contract for a deliverable. Where are you going to go?
Pete, that's kind of where I want to get your take on something very quickly. Economically, we're starting to see slowing growth out of many of these countries.
Right.
In Asia, it's obviously just last week Japan came out with just a terrible GDP number. Year over year, down 6.8%. We're seeing European PMI numbers come in recessionary territory, and we've been seeing that for a couple of years. And now we're seeing, the news coming out of China, although, still disastrous, and, your heart goes out to the human condition.
Oh, absolutely.
We're seeing spreads in Japan. We're seeing spreads in Italy. We're seeing spreads in South Korea. And economically, this is it's going to take a while. Even if they control where the levels are right now, economically, the consumer base is going to it's going to take time for the consumer base to come back in with confidence. Right?
Well, absolutely. Very well put. And the thing is, too, not only is this disease putting pressure on everything, but it is it comes at a very unusual time. For example, Japan and Korea are just are in this horrible economic battle where they're just at each other right now, and so they're not trading like they were before, and subsequently, both GDPs are dropping,
Mhm.
and it brings into account. Let's look at this. Where do you think? How are you going to make up for the fact that your economy's dropped off and you have a lot of deliverables coming in from everything, soybeans, corn, whatever it happens to be? You have a lot of people to feed in China.
Mhm.
What are you going to do? Are you going to devalue? Boy, their market, the stock market in China, to be succinct, is down 55%. Think
Wow.
about that. That's a staggering number. Now you're coming in, you're going, well, we had to burn all the money. We're going to have to print more. We have 2, 3, 4, or 5 months of deliverables that are due today. We have to pay
Yeah.
for. So what are you going to do? I mean, I think it's 75-25 that says that China's going to devalue. And boy,
They have to.
yeah,
They have to.
I mean, it's a staggering number, though.
Well, and that's kind of my question. Over the last 3-4 years, as we've been, just pushing down that next recession down the road with whatever monetary policy, a
Sure.
lot of us have just been waiting for that next situation to occur that really kind of impacted global growth from a GDP perspective. And I remember last year when Apple revised their guidance in the first quarter of last year, and they revised it down 10%. And then the entire argument all year long last year was that we're going to buy because this is going to be the worst of the situation and growth is going to come back in 2020. And now coming into January of 2020, now we're staring down the barrel of the coronavirus, and we're seeing the second largest economy in the world contract in China. We're seeing the third largest economy in Japan contract. You're seeing the 8th and 12th largest economies in the world in Italy and South Korea start to contract as well. And that's not even talking about Germany already in, just the brink of a hair away from a recession.
Yep.
Is this something that, in your opinion, can cause that next global recession where we saw, circa 2008, 2009, or 2000 through 2002?
Two things can happen. We can have a gigantic. Let's put it this way. The bottom line is the dollar is so strong it's scary. All right.
It hit parity just last week.
Right, exactly, and not too many people know that. So as strong as it is, you come in with dollars, people are like, I don't know, I don't think I want to give up this ratio. It could either do one of two things. It could either make us a complete powerhouse where we have this tremendous buying power, or people are going to back away from us and say, maybe I'm going to go to Argentina and buy this product. I'm going to take my soybeans from Argentina. They're having a lot of problems. I'm going to go into Brazil and go into that area and pick up my corn and beans and things like that. Even though they've signed agreements, they've had to back away from the agreements because of the disease. So the question becomes, and we're right on the edge of, how are we going to affect? Is it going to be adverse, or can it be positive? A lot of companies, I will tell you, that I've been talking to are looking at saying, you know what, I think I'm going to come into the United States. Trump has set up where they're giving us a moratorium on taxes. If we could come in and if so, he's saying we'll put you in at 5%. We're fine to do that, and you can come in and manufacture. We'll give you a zero tax base at that area. So, how good is it going to be for America?
Well, I go back to the arguments over the last 3-4 years. Whenever the dollar did start to see a rise that we've seen the dollar at 100 on the dollar index before. And I remember, coming into 2015 and coming into 2018 when we had two pretty bad years. I mean, 2015, the S&P 500, I think, went up 1%.
Right.
2018, we saw, a lot of volatility, but the market actually went down only about 4 or 5% with that terrible December of 2018. And in both of those years, when you track guidance and revenues coming out of the S&P 500, most of those companies blamed the strong dollar on the fact that exporting had been impacted in that capacity. And now we're seeing the dollars has up 5-6% just in the last 3 weeks.
And let's add this to it, because remember, we were involved in actively in a lot of copper mining, a lot of smelting, copper wire, things of that nature. Car sales are down 90% in China.
Okay.
All right.
That's a staggering number. How's that going to impact things like palladium?
Tell you what, this is a very good question. First off, let's look at it this way. Your average car, when it's manufactured, has 20 to 50 pounds of copper used in the wiring and things like that. So your consumption of your refined product, your twisted wire and your straight strand wire, gone. Just gone. Singapore came in last Friday. Singapore, which has been kind of on the fence with going green, said we're going to a zero carbon footprint. We're going to take all of the cars off the road and make them all electric by 2025. Tesla, right, shoots to the moon. And in the meantime, oh, by the way, their plant's closed in China. So, I mean, how is it going to affect the raw materials? It's not. There's 120 pounds of copper in that vehicle. It's not being manufactured now. All right. That's just an example of what's going on, and it goes to what you're saying. The refined products, copper, palladium, spun strand silver wire, all of the catalytic converters,
industrial metals.
Exactly right. And the industrial metals, I mean, if you remember when I started telling your viewers that rhodium looked good at 3,000 and it went to 12,000, right?
Yeah.
That demand now is going to start to wane, because they passed the green bill in China, which said we no longer want to be able to see the air we're breathing. We're thinking maybe we want it to clear up just a little bit. So in effect, what happened was they said every car is now going to have a catalytic converter on it, which was a whole new concept to them. And now that demand is vanished. And here's something very interesting. This morning they came out with a number and said that the registered air quality in China is 40% better today. And so that shows you how little movement is going on in the country. There's no cars, no trucks, no buses,
no nothing.
No nothing. Right? Exactly.
I mean, Pete, if you're a Chinese citizen in mainland China, you're not leaving your home.
No, you're not. And if you legally can. Right.
Well, and that's kind of my concern from an economic perspective is we're hearing all this data about, or all this news coming out of China that, they're going to send the workers back to work. They're going to open up businesses. Right. I just don't think the confidence of the consumer base is going to match that. Not until we see some, not just slowing momentum in the coronavirus, but we start seeing it contracting.
Yeah. Well, I mean, that could happen pretty quickly. We could see that. If we don't tip 100,000, I think we're going to be good. You'll notice the two countries that we really don't deal with, which is Iran and North Korea, both of which have had outbreaks because China is their primary dealer. All right. And I kind of expected to see it there, and we have, but they have learned from other people, and they're starting to get aggressive in the same manners that they did in China. But to get to your core question, how heavy is the impact going to be? I think I concur with you on this. I think it's going to be much larger than we think. I think we're going to start to see some earnings that are rather abysmal. And China's answer, by the way, today was, by the way, for earnings, how has it impacted your government? We're not going to allow companies to release earnings this quarter. So it's all fixed, right?
Man. It's just a house of cards, isn't it?
Man.
Let's say we don't see the worst economically here. Let's say we see stagnation.
Right.
Whether we see stagnation or whether we see some recessionary indications, what is the central banks around the world going to do to stave off a contraction in corporate earnings and a contraction in the market?
Well, I mean, they're going to have to get to a saturation point to where you can only print so much, you can only pump so much, and then you get into deflationary effect, which is really not where they want to be because they've just been beaten up globally by the dollar. So how do you balance this out? I don't see how you're going to balance it out, because if the U.S. keeps steamrolling right along, and even though, and remember, it's sort of like gold. Gold has a relative value to what? To the dollar, to the pound, to the euro, that's its real value, is what you counter it next to. That's its real value. The gold today made 77 record new highs against different currencies.
That's amazing.
Yeah, yeah.
Amazing. And we're not there from the dollar yet, right?
No, no, exactly not.
We're still underneath on the dollar, but almost every other major currency, gold has just been doing dominant against some of those. And I was talking to my older brother, Mark, or before I came onto the interview. Mark is a infamous bottom feeder in commodities. Like, he hates chasing the dragon as market prices go up.
When I put him on cobalt at like $9, he was drooling. He was like, "What? It's not. I want." I said, "Go, man."
Bottom feeder.
I know. Yeah.
Feeder. But even he today was like, "Do I add to the position in gold at these elevated price thresholds?" My take on gold, and I want to get yours as well. Sure. Here, Pete, you're the expert. Yep. Regardless of an economic situation, whether they get it handled, whether recession. I just believe that the central banks are going to try to throw money at the problem, as they've been trying to throw money at the problem, which could see markets go up, but it could also see gold go up as well. What's your take on gold specifically from a price perspective? Where's the top ceiling here on gold if we continue to see what we've been seeing over the last few months in gold?
Well, here's the thing: if you're in China and you're holding yuan, or you're offshore, you're trading renminbi or whatever it happens to be, and you're saying to yourself, what's it going to be worth? And you and I sitting here can see it quite plainly, even as well as they're trying to disguise it. It's leaking out everywhere. So the question becomes: do you want to take your yuan and buy gold? I think it's yes.
Oh, I think the answer is a resounding yes.
Yeah. So
especially on any currency not named dollar right now.
So the syringe that pumps gold into mainland China is Hong Kong. All right. And so we're going to see a tremendous amount of gold going into Hong Kong through Africa and, through the Middle East, areas like that where they try to buy, where they can cover the flow a little easier, where it's harder to record. They and that's how they do their gold. And the question becomes, how much higher? If the demand stays as high as it has been, it's going higher. It isn't even a matter of if. The question becomes now is, how much are they going to devalue, and how many other currencies are going to feel that pressure? Everybody that manufactures, who looked at every COO who looked at their bottom line and went, I'm paying $15 an hour for this guy, or I can go to China and pay $250. What am I going to do? So everybody moved to China. Now the question is, oh, by the way, China's shut down. How is it going to impact on my business? Am I going to be able to start my furnaces again, start my manufacturing? The answer is no. So they're going to have to do something with it. Well, where do you want your money? I mean, gold seems to be the obvious answer right now.
Well, and to me, gold, the factors of why gold right now are pretty strong. Number one, you've got a slowing global economy. Right. Even before Corona, and in a slowing global economy, gold is a safe haven asset. What, if not the safe haven asset?
Right.
It's a guard against economic risk. It's a guard against market risk, but it's also an inflationary asset as well. And you have all these factors that are kind of coming in line together and making this kind of a perfect scenario for gold appreciation, in my opinion.
Oh, and who's the best gold trader in the world? Putin. Nobody trades gold better than Putin. I mean, Putin had and has had a standing order for 29 months for 20 tons of gold delivered every month to the central bank, regardless of price.
Wow.
All right. In the meantime, he's shoving rhodium, platinum, palladium, beryllium as fast as he can into his centralized vaults. It's not by accident. The guy is just a brilliant trader.
He's preparing for something.
Yeah, whatever it was he was preparing for, he did it right.
Yeah.
And so now they've picked up $300, $400, $500 on their total central bank holdings, which is a staggering amount of money. So that and the People's Republic of China's central bank has been buying anywhere from 12 to 33 tons a month. So the two main powers offshore have been accumulating and accumulating big for a very long time.
Mhm.
So when I start to see them selling product, I'll let you know. But right now, nothing's coming out. I'm not
Right now,
getting
it's
any.
buy.
Yeah, I'm not getting any calls. Hey, I got a couple tons here. What do you pay me for?
Who's going to buy them? Everybody.
Yeah, pretty much. Yeah,
It's like selling a house in a hot market.
yeah,
Right?
exactly right. Yeah, there's 6 guys standing on line. Exactly right.
I want to move on to silver very quickly.
Sure.
Silver, the GS ratio right now is pegged at about 89 to 90, which is historically on the very, very high end. And when that
Right.
typically happens, a lot of times you'll have money come into the silver market to contract that GS ratio. We've seen silver to gold ratio be at those elevated levels for a few years now, right?
Yeah, we've seen it up to 100. Absolutely.
To me, number one, is the GS ratio, is it to a certain extent, is that type of analysis dead since we've seen it just elevated at such a high level? And I think both of us share the opinion that gold over silver right now, correct?
Oh, here's the thing. Remember, silver's kind of a schizophrenic metal. Do you put money in it because it has an intrinsic value? It's like gold, it's going to hold value. Or do you put money in it because it has so many industrial uses, computer keyboards, telephones, cars, anything that you're manufacturing that passes
Any
electricity?
technology. Yeah.
Right, exactly right. So you say to yourself, if I own this here and I have it right now, and I'm paying, let's see, when I was on your show, I was touting it at 12 and 13. We're at 18, 19 now. So are we getting close to a top? Well, you have to say to yourself, if our scenario is right and we do see pressure come into the market, silver is not going to rally because its industrial usage is not going to be as great for its demand as
kind of what we were talking about with cars and in that earlier conversation.
Exactly right. The 90% reduction in production, as well as a lot of people in hard economies, they aren't replacing phones and their computers. So I think your question to being, how wide is this going to stay and will it continue to be this wide? I think it will. I
think we go above 100 on the GS ratio.
Yep. The possibility is certainly there. And, I'm selling silver. We're seeing silver going out the door. We're seeing it go at a pretty good clip, but the gold demand is still king.
Still strong.
Yeah.
Another if it's not king, it is queen.
Yeah.
Palladium. Right. Palladium has been on a meteoric rise. Just broke out of 2,400.
Right.
Kissed off about 2,800 just earlier this week. We are seeing a little profit taking right now. That was one of your best calls that you've had on this podcast. Is the buy on Palladium at right? Yeah. I believe it was like 800 or something somewhere in that range. What's your recommendation to your clients regarding Palladium at this point?
About last week we do a weekly podcast on Friday, which is a market wrap up. And on that market wrap up, I was talking to Pete Grant, who runs our Denver office.
Yeah.
Pete and I were chatting, and he says, he's a very good technician. He says, you know what? Palladium to me looks like it's topped. He goes, this is a classic technical what we call a blow off top.
Yeah.
And that blow off top, and then I looked at demand, and right now we are still in deficit, which we have to be aware of. There's a greater demand than there is production right now. What has been filling the demand or the gap has been recycling. And the recyclers have been doing a tremendous job of getting this product as quickly as they can to the market for usage. That being said, without the green demand coming in from China, which is just gobbling up all the catalytic converters that are coming off of vehicles, it's going to continue to put big pressure on palladium. So to answer what you're saying, I think we saw our short-term top, and we will continue to see pressure in there.
So that blowout top, I remember watching it late last week, and it was just literally 2 days, right?
Yeah.
2 days, massive price appreciation. Then, 2 days coming right back down. It's going to be interesting to see from a technical perspective how that 2,400 level old resistance, how that acts as a new support level. I think we should keep an eye on that as well. Pete, it's so awesome to have you on the podcast as always, Pete. If people want to get in touch with you, purchase precious metals from you guys, how do they get in touch with you?
Best way to get a hold of us is through the direct line. You can call 312-277-0140. Drop me an email at pthomas@zaner, ZANER.com. We'll get back to you as soon as we can. We'll be happy to send you our links for our various on-site purchasing. We just got a lot of silver in. We're good if you want to buy some silver coins. Gold bars and ingots are available. So we've managed to keep product in. Platinum and palladium, unfortunately, it's almost been impossible to keep on the shelf. I'm sorry, but orders might have to rest a little bit. Yeah, I mean, and guys just come in and say how many you got. It isn't a matter of how much.
Awesome. Well, Pete, last thoughts?
Last thoughts are this. Keep track of us every Friday on our podcast.
Where do people get access to that, Pete? Is it on your YouTube channel?
It's on our YouTube channel under Zaner Metals. It's there every Friday. We try to, from our standpoint as handlers of the physical, we try to give you an overview of what's going on in the world as far as demand goes. Generally speaking, as we've been talking about, we're usually a little bit ahead of what's going on because we're seeing boatloads of product leaving and being used and consumed. So it might be a helpful indicator for you in the future.
Yeah, and definitely get over there and subscribe to the Zaner's YouTube channel. They release that every Friday. And, you know, Pete, I just love it because it's just a 15, 20-minute quick guide on what's going on in the market that week in the precious metals market, the commodity market. So definitely go and subscribe to Zaner's YouTube channel. And with that, we'll be right back.
Thanks so much.
TJ Podcast.